Good afternoon, ladies and gentlemen. My name is William H. Thompson, CPA, MBA, and I'm the founder of RE Accounting and Tax Professionals. We help real estate investors maximize return on investment through expert tax strategies, while at the same time helping to build and sustain a legacy. Welcome to Free Information Friday. Today I'm going to discuss the home office deduction and why it's important to real estate investors. So let's dig in. So what do you need to do in order to qualify to take a home office deduction? Very simple. You have to be a legitimate business under Code Section 162. What does that mean? Well, if you own properties, rent properties out, collect rents, pay vendors, you have a legitimate business under Code Section 162. Therefore, you're able to take a home office deduction. Now, why is that important? It allows you to gain travel expenses and other expenses, as I will point out a little bit later. So if you don't have a home office and you travel from your home to Home Depot, to your property, or to other vendors, that's considered commuting miles and you're not going to be able to deduct it. However, if you have a home office deduction, now your mileage to Home Depot, your properties, and other vendors becomes deductible travel expenses, which will help reduce your bottom line income. But here's the real trick. Typically, if you're running your business correctly and you're working with us and using the strategies that we teach our clients, your rental property business should show a paper loss. What does that mean? It means that you're not going to be able to deduct the home office deduction. Maybe it's in its entirety or partial. And I'll give you an example. Let's say prior to taking the home office deduction, your rental business showed a $5,000 profit. But you tallied $6,000 worth of home office deductions. You're only going to be able to deduct $5,000 of the $6,000 of home office deductions. That will let you zero out your income. The $1,000 that you're not able to use, you don't lose it. You get to carry it over. So you ask, why then is the home office deduction important? In addition to travel, let's say that your business purchased an F-150 valued at, I guess they're going around 60, 70,000. Let's say 60,000 today. And thank God now that the big beautiful bill brought back 100% bonus depreciation. You can depreciate the entire $60,000 of that truck, and you can reduce your bottom line an additional $60,000. Now, there's a caveat there. You need to be able to qualify either under a real estate professional status or short-term rental loophole. Now, there are strategies that I use in my practice and I've discussed in other videos. But let's say that you don't qualify under those two strategies. You don't lose the loss. It gets carried forward. But working with us, that would not happen, because we would scope out where we think you're going to be and whether you're going to qualify for those two exceptions. And if you don't, we're going to suggest that you don't take the bonus depreciation. You may want to take it in a year where you can use it, or when you're in a higher tax bracket. All these strategies come together, and when you work with us, you'll have peace of mind knowing that we're putting all the pieces of the puzzle together for you. Now, I hope this segment of Free Information Friday was helpful to you. And remember, if you're a real estate investor that wants to maximize return on investment through expert tax strategies, book a call with our firm. And remember, only you can create your empire, but we are here to help you every step of the way. Thank you, and I wish you much success on your real estate journey.